Have you ever wondered what Bitcoin halving is and why it matters in the crypto world? Well, let's unravel this together. The Bitcoin halving is an event which reduces the number of new Bitcoins generated by the network by 50%. This dramatic shift happens approximately every 4 years, or more specifically after every 210,000 blocks have been mined. Imagine a gold mine where the amount of gold discovered suddenly gets slashed in half. That's the Bitcoin halving for you. It's like a heartbeat that keeps the Bitcoin ecosystem alive and thriving, ensuring that the currency remains decentralized and that it never inflates beyond the prescribed limit of 21 million coins. What makes this event so fascinating is its predictability. Unlike most economic events, we know exactly when it will occur and how it will affect the Bitcoin supply. Now that we've grasped what Bitcoin halving is, let's delve into why it's significant for Bitcoin and the entire crypto market. Why does Bitcoin halving hold such significance for crypto enthusiasts? Indeed, to understand this, we need to delve a bit deeper into the mechanics of Bitcoin. Akin to gold, Bitcoin is also mined, albeit digitally. With every passing minute, new Bitcoins are created and added to the market. But unlike traditional resources, the supply of Bitcoin is capped at 21 million coins. This is where the concept of Bitcoin halving comes into play. Approximately every 4 years, or after 210,000 new blocks have been added to the blockchain, the rewards for mining Bitcoin are slashed in half. This is known as Bitcoin halving. With the first halving event in 2012, the reward went from 50 to 25 Bitcoins. It further reduced to 12.5 in 2016, and then to 6.25 in 2020. Now you might wonder, why is this significant? Well, as the rewards for mining decrease, the supply of new Bitcoins entering the market also slows down. This reduced supply, coupled with a constant or increasing demand, could potentially lead to a rise in Bitcoin prices. That's a pretty appealing prospect for Bitcoin holders and potential investors, but there's a flip side too. The decreased rewards could lead to a decrease in mining activity. After all, miners need to cover their operational costs, and if the rewards are less enticing, some miners may choose to exit. This could affect the overall security of the Bitcoin network, which relies on miners to validate transactions. However, history has shown us that the Bitcoin network and market have resiliently adapted to previous halvings. Miners with efficient operations continue to mine, and market participants have generally reacted positively to halvings. So, Bitcoin halving can potentially reshape the landscape of the crypto market, but what about the specifics of Bitcoin mining? How many Bitcoins can be mined and how many are already in circulation? Let's delve into the nitty-gritty of Bitcoin mining. The total number of Bitcoins that can ever be mined is capped at 21 million. This finite supply is what gives Bitcoin its value, playing into the classic economic theory of supply and demand. So, how many of these 21 million Bitcoins have we mined so far? As of today, over 18.5 million Bitcoins have been mined and are in circulation. This leaves less than 3 million Bitcoins yet to be discovered. But you might wonder, how long will it take to mine all the remaining Bitcoins? Well, that's a tricky question. Bitcoin mining isn't as straightforward as digging for gold. It involves complex mathematical puzzles that only powerful computers can solve. And here's the kicker. The Bitcoin network is designed to produce a constant stream of Bitcoins, regardless of how many miners are working. Roughly every 10 minutes, a new block of transactions is added to the blockchain, and the miner who adds it is rewarded with new Bitcoins. This means that as more miners join the network, the puzzles become more difficult to solve. Now, you may have heard of the term Bitcoin halving. This is a feature built into the Bitcoin protocol to control inflation. Approximately every 4 years, or after every 210,000 blocks have been mined, the reward for mining a block is halved. This slows down the rate at which new Bitcoins are created, and extends the time it will take to mine all 21 million Bitcoins. In fact, it is estimated that the last Bitcoin won't be mined until the year 2140, over a century from now. But what does this mean for future halvings? Given the current rate of mining, we can expect several more halvings to occur before all Bitcoins are mined. Understanding the mining process and its limitations gives us insights into the potential future of Bitcoin. But what does this mean for those holding Bitcoin? Could holding Bitcoin be a golden ticket to future wealth? Let's dive into that. In the world of cryptocurrencies, the term HODL, a misspelling of hold that has now become a popular acronym for Hold On for Dear Life, encapsulates the idea of holding on to Bitcoin rather than selling it in anticipation of future price increases. This strategy has been adopted by many Bitcoin enthusiasts who see the digital currency as a long-term investment. One of the main reasons behind this strategy is the limited supply of Bitcoin. There will only ever be 21 million Bitcoins in existence, and over 18.5 million have already been mined. This scarcity factor could potentially drive up the value of Bitcoin in the future as demand continues to grow. Moreover, if we look at the historical trends, the value of Bitcoin has seen exponential growth over the years. From being worth just a few cents in 2009, Bitcoin's value skyrocketed to nearly $60,000 in 2021. It's this potential for dramatic increase that makes holding Bitcoin a tantalizing prospect for many. But it's not just about potential profit. Holding Bitcoin is also a way to participate in the cryptocurrency revolution. It's a vote of confidence in a new kind of financial system that is decentralized, transparent, and operates independently of traditional banking institutions. However, it's important to note that the value of Bitcoin can be highly volatile. It has seen numerous price swings in its relatively short history. So, while holding Bitcoin could potentially lead to substantial gains, it could also result in significant losses. That's why it's so crucial to approach Bitcoin and other cryptocurrencies with a balanced perspective. Yes, the potential rewards are enticing, but they should never overshadow the inherent risks involved. It's about being informed, understanding your own risk tolerance, and making decisions that align with your personal financial goals. While the potential rewards are enticing, it's crucial to remember that crypto investments come with their risks. So, if you're considering stepping into the world of Bitcoin, do so with both eyes wide open. While the crypto world offers exciting opportunities, it's not without its risks. The volatility of cryptocurrencies is a key factor that every potential investor must grapple with. Prices can skyrocket in a blink, but they can also plummet just as quickly. This unpredictability can lead to significant financial gains, but also substantial losses. Another risk factor lies in the fact that the crypto market is still relatively new and unregulated. This can make it a fertile ground for scams and fraud, leaving investors vulnerable. Moreover, though we've spent considerable time discussing Bitcoin and its potential, it's crucial to remember that this video does not constitute financial advice. It's simply a tool to help you understand the mechanics behind Bitcoin and its potential implications. Investing in cryptocurrencies should be approached with caution. It's not something to rush into without proper understanding and assessment of the associated risks. Remember, before diving into the world of crypto, always do your research and consider your financial situation.